Hi, imagine this. You are using a cool new app every day. Maybe it's for food delivery or a new tech tool. Suddenly, you hear the news that private company is going public. It's launching an IPO. What does that even mean? And more importantly, how can you get a piece of the action and potential wealth? Hello and welcome to the only guide you need an initial public offering or IPO right here in India on the NSE and BSE. In the next 10 minutes, we'll demystify everything, the simple meaning of an IPO, why big companies like TCS or Zomato did it, the step by step process, and exactly how you can apply. Stick around because this knowledge is the key to become a smarter investor. Let's break down the jargon. IPO stands for Initial Public Offering. Think of a company like a family run bakery. Right now, only the family owns it. They want to expand, maybe open 10 new branches across the city. They need a lot of money. An IPO is like that family run bakery deciding to sell tiny manageable slices of their businesses, which can call shares, okay, to the public, like a shareholdings, okay, for the very first time, as a public issue. Okay, so by doing this, they raise the huge amount of money they need for a growth. The moment the IPO finishes, the company's shares get officially listed and start trading on the stock market. Our famous exchanges, let's like say NSE, National Stock Exchange, and BSE, Bombay Stock Exchange. Okay, so the company moves from being private to public. So why give up the private status? It comes down to the three main reasons, and they are all about growth and money. Number one, fuel for the fire. So, this is the primary reason companies need capital to expand, build new factories, launch new products, or clear old debts. The IPO provides a massive one-time cash injection. Okay. So number two, an exit for early backers. So like ESOPs or any company stakes, initial earlier VCs, right? The startups often have angel investors or venture capitalists who invested years ago. They helped the company get started. The IPO allows them to sell their shares to the public and get a huge return on their investments. So it's their payday, right? And number three, the brand trust. Listing on NSE or BSE instantly boosts the company's reputation. It shows they are transparent, follow strict SEBI rules, and are generally seen as more stable. This also makes it easier for them to borrow money later. So change of pace, serious tone, uh, of IPO. They need like to, oh, and hold on. Not every company can just decide to sell shares. There are strict gatekeepers. SEBI, Securities and Exchange Board of India. SEBI is the regulator that protects your money before an IPO. The company and its investment bankers must create a huge document called prospectus. This document is the company's entire life story. So their profits, their losses, their business plans, and all the risks. SEBI reviews this document and called as DRHP. It's draft red hearing prospectus to ensure everything is legal and transparent. If SEBI gives the green light, only then can the IPO proceed. So SEBI has approved it. Okay. Now, how does this public scale actually happen? So it happens in four simple stages. Stage one, the price fix. Most of the big IPOs in India use something called as book building. The company doesn't set one fixed price. Instead, they set a price band, a minimum and maximum price, say 100 to 105. Investors then bid for the shares within their price range. Stage 2, marketing. So before and during the bidding, the company goes on roadshow. They go for a big cities, present their business plans to large institutions, and try to generate excitement and demand. So this is why you see all the IPO news in a media, right? So stage 3, the application stage. This is where you and the retail investors come in, and you apply for shares through your Demat account using a system called ASBA, application supported by blocked amount. So your money stays in your bank account blocked until the shares are allotted. You must apply for a minimum lot size, which is fixed number of shares, right? Allotted, decided by the company. So stage 4, allotment and listing. If the IPO is popular, means oversubscribed, the allotment is done by a fair lottery system to ensure everyone gets an equal chance. So the shares you then credited to your Demat account. This is the big day, right? The shares officially list on the NSE or BSE and start trading. So this is often where the famous, quoted as a listing gain, happens if the price shoots up. Okay, so you are ready to apply, right? So you need two things for applying: a Demat account, okay, to hold the electronic form of shares, and a trading account to place the order. So you apply online through your broker's app or your banking app using ASBA, okay, using your UPI ID for the payment block. Okay, so super simple it is, but wait. So every exciting opportunity comes with risk. So IPOs are not just guaranteed profit. The reward is the potential for huge listing gains or long-term growth. The risk is that company may not perform well and the share price could fall below the IPO price after listing. Okay, think of the IPO as a launch party, right? So the price might be higher because everyone is excited based on demand, or the real test is the months and the years after the listing. So the golden rule is always read the prospectus and research the company before you invest to make this real. Okay, so let's look at a recent landmark IPO, right? Tata Capital Technologies, like 20. This is the IPO was massively popular, oversubscribed. Tata Technologies 2023. So many times over because of the high demand and the strong parent brand Tata. Many investors saw significant listing gains, meaning the share price on the first day of the trading was much higher than the IPO price. This example shows the potential excitement of an IPO. But remember, for every stellar listing, there are others that fizzle out or even decline, right? Your takeaway should be research the prospectors, the people running company, right? So check the valuation. Is that price too high or low? And never invest money you can't afford to lose. Okay, so let's quickly wrap up. An IPO is a company's first sale of shares to the public on the NSE or BSE to raise money. So it's an opportunity for you to become an part owner, but it requires a smart research to avoid the risks. If you now feel confident about understanding IPO, hit that like button below. What other financial topic confuses you? Drop a comment below. I will make a video on the most requested topic next. And if you know someone who's constantly taking about the latest IPO, share this video with them right now. Subscribe for more straight talking finance guides, right? Thank you for watching and happy investing.